if they keep making progress like they made progress in this last quarter, then we're talking. It's going to be some exciting times over this next couple of years. It would hurt Google, but it would hurt Apple far more because so much of that money goes straight to the bottom line of Apple. And Apple's the biggest market cap, obviously, in the stock market, and this would be a fundamental change for the negative for Apple, right? As I stated many times, inflation is not even going to be subject really in 2024, in my personal opinion. We're going to be probably twos the entire year for the most part. Howdy, folks. Welcome in to today's video. Hope everybody's doing phenomenal out there. Hope you're making a whole bunch of flapjacks out there. Flip some flapjacks, folks. Flip some flapjacks in the chat if you're making some money today. Because if you're not making some money today, I don't know what to tell you. You might never make some money, okay? Yeah. Flip some dang flapjacks, folks. Woo-wee! Quite some moves out there. That's what I'll say about that. Okay, so we got a lot to go through in today's video. I've got to talk CPI, got to talk about Home Depot numbers. I got some earnings after the bell. Obviously, massive moves in the market. So, yeah, let's start getting into this. We got a whole bunch to go through here today. So, looking like Dow's up about 587 points. S&P 500 is up over 2% here today. Nasdaq's about 2.5% in the Russell Wilson. The Russell Wilson's up nearly 5% here today. Holy smokers, that's no dang jokers. Fubo, 14.5% up today. Nordstrom up almost 10% today. Elf on a Shelf up over 9% here today. Honest up 7.5% today. Revolve up over 7% today. Corsair up 6%. Tesla up over 6%. Shopify up about 6%. Foot Locker up 5%. Skyworks up 4%. PayPal up 4.5% here today. WBA up 4%. Cake up 4%. Win up 3%. Target up 3%. I mean, the moves are just moves on grooves. Only things I got red today is my SDAO hedge and then Avant slightly red. Outside of that, it is green all over the flip and flapjack in place. Huge day, obviously, for the portfolios here today. And safety stocks. Safety stocks are even green here today. You know it's a good day. Oh, man, Monster's barely eking out a green day here today. I don't know what's going on with them and Celsius. Celsius had some weakness yesterday. Fourth quarter, potential buys. I don't like. That's the one bad thing about stocks going up is then you're like, if I buy, I have to pay higher prices. That's no fun. Obviously, it's a rough day for any hedges out there. AI stocks here today. Looks like Palantir is actually the worst stock today. Palantir, what's going on with you, baby? It's been a run for Palantir. It has been a run for Palantir, but Palantir is actually the worst stock of AI stocks. But damn, look at that year to date for Palantir. Oh my gosh. 211%. Jeez. Trade Desk is the best stock of AI-related stocks here today. Trade Desk is about 7% mover. We spoke about Tesla last time. My gosh. Time to see where the public count closes here today. Banking stocks. Everything's green out there in regards to banking stocks. JP Morgan, the biggest lagger of the bunch here today. KRE is the most outperformed. Look at the KRE today, folks. 7.5% move. That's crazy. That's a crazy move. KRE is a regional bank index. Jeez, 7.5%. Whew. Wow. Big tech stocks. Mr. Softy, the worst stock of the bunch here today at a 1% mover there. Best stock of big tech today is Tesla, so 6% move. Shopify is also having a 6% move day today for Shopify. If we look at the Cathie Wood watch list here, Coinbase, only stock down here today on there. And then obviously TARK, which is like if I recall, that's a 2x leverage of the ARK fund. That baby's having a great day, obviously 10% mover there. Wow, just crossed 16%. Okay, so let me jump in the chat here. Let me scroll up a little bit and start chatting it out. By the way, everybody, flip some dang flapjacks, man. It is a money maker out there. Somebody asked, cheesecake versus Texas Roadhouse, what do I prefer? I mean, obviously, I have more money invest in cake, but I freaking love Texas Roadhouse too. I mean, their business model obviously is phenomenal. The way they're run is so freaking amazing. I think they're the most well-run restaurant chain. I think after that, cake's probably number 2. And, I mean, their balance sheet's the best of the best. It doesn't get better than their balance sheet. I mean, they have no debt. They're cash loaded. I freaking love Texas Roadhouse. Somebody said Fubo, flipping flapjacks. Damn. it definitely is flipping some flapjacks, and that's not the only one. There's a lot of stocks out there flipping flapjacks here today. Anything that's, Russell related, small cap related. I mean, look at those. Look at all my best stocks today. They're all considered pretty much small caps, right? Fubo, Nordstrom, Elf is kind of more of a mid cap now, but still kind of gets grouped in a little bit to small cap. Revolve, Honest, Corsair, those are all small caps, and look at the way the moves are. And that's the thing, if the Russell can just get moving, if the Russell was to go up 10, 15% over the next few months, I mean, what that would mean for those stocks is insane. It's a game changer. Somebody says, my hedges include SPY call vertical spreads dated throughout late 2024 and early 2025. If it continues to run, I'll take the premium to collect to find puts on SPY. Interesting. Okay. Steak beats cake. That's funny. Does it really, though? Does it really? Oh, gosh. Somebody's asking about TJX. I have no opinion on TJX. It's not a company I follow close at all. I have no opinion on them. And by the way, we're going to look at Home Depot earnings in just a moment. I can't wait to see those. Jeremy, you never covered Match Group. Are you bullish on dating app conglomerate? They're beaten down like Match Group. I'll have to retake a look at them some point in time. Somebody says they bought Russell 2000 today at market open. Enphase doing good. Bought at $79. Dang, you got pretty close to lows. Wouldn't Enphase get down to 77? I think. So if you got Enphase at 79, you got pretty close to pretty close. Jeez. Projection for Honest over the next 2 years. Oh, we'll see. We'll see. They took a step in the right direction with these latest earnings. If they keep making progress like they made progress in this last quarter, then we're talking. It's going to be some exciting times over this next couple of years. But I don't want to get too excited about Honest. We'll see. We'll see. Okay, they've been on thin ice with me for a bit, so we'll see. But they definitely took a step in the right direction this earnings. Estee Lauder up 8%. Yeah, huge move. JWN earnings coming up next week. Any ideas what to expect? Not really. I'm not expecting anything strong. Personally, as a shareholder of the company. How do you determine when to buy hedges, and how do you look personally to determine strike price? I mean, there's a lot that goes into that. I have some ridiculously in-depth videos about hedging inside the private stock group, inside the course curriculums in there that go, I have videos about hedging that are 45-minute videos just speaking about hedging. It's really obviously a very complicated subject, and it's not for everybody. For most people that have smaller net worth, smaller accounts, it doesn't even make sense to hedge. It's really when you got a lot of money to play with. Honest was 12% of my portfolio, now 4 to 5%. Okay. Hedging, no point under 100K. Yeah, hedging is usually for, if you got a lot of money in the market. If you got multi-millions and things like that, that's where hedging gets, a little bit, it makes a little more sense, right? If you have tens of millions, if you have hundreds of millions, there's a reason hedge funds exist, right? And hedge funds aren't always about just trying to produce alpha and trying to outperform the market. A lot of times when it comes to hedge funds, they're there to preserve wealth as well for high net worth individuals, right? How do you feel about a company cutting off their money-losing flagship product R&D to focus on already working product? Depends on the situation. That might be good, it might be bad. Really depends on the situation. It's a very specific question, right? When do we buy Nvidia is a real question. Alrighty, folks, let's see what the chat. Oh, there he is, Ed Yardini.
We're getting a very strong November. I think we're already in the Santa Claus rally, and we surprise even the optimists like myself.
But I mean, it's not like earnings were fabulous, right? I mean, they are somewhat lackluster.
Some earnings are freaking phenomenal. Next year, depends on the company. There's a lot of good earnings.
No, I think they're quite good. I mean, as I said, we're talking about record earnings in the third quarter. And I know that analysts have been shaving down their estimates.
There's a lot of good earnings
because they've been getting some cautious guidance from companies. But companies have to do that in the kind of environment we're in. As an economist, as a forecaster, I think next year is going to be a better year, and I think earnings are going to be strong. Look, Scott, I've been at the top end of forecasters on earnings. I thought 225 this year, 250 next year, and 270 for 2025. And I've been saying that for over a year, and for over a year I've been kind of wondering whether I should lower it, and I haven't, because the economy continued to perform pretty well as I thought. It was actually, again, everything has been working out better than optimists like myself have been thinking. I mean, third quarter economic growth was fantastic. I wobbled a little.
Damn, Celsius down again. There's got to be something really bad going on at Celsius. That stock was down huge yesterday, down huge again. And yeah, definitely has been one of those years that everything's been going better than even the optimists have thought it would go, right? And the bears has just been getting obliterated this entire year, just wrecked, right? And it was really the complete opposite of last year. Whereas last year, everything just continued to go worse and worse and worse than the optimists expected, the bulls, right? And everything went better than the bears ever anticipated. Like the way everything played out in 2022 was so perfect for the bear scenario. It was incredible, right?
Digits, but that still can't save the stock this year. And one EV maker sitting out this market rally. I'll explain why after this short break.
Who is it? Lucid bankrupt? I want to look at Home Depot earnings here in just a moment. We're going to go to their investor relations page. But in terms of CPI, it came in at 3.2%. I think everybody was expecting 3.3 for the most part. So, as I stated many times, inflation is not even going to be subject really in 2024, in my personal opinion. We're going to be probably 2s the entire year for the most part. And, commodities aren't there. Commodities are down in the past year. Housing prices can't go up right now. Rents continue to have a lot of pressure weighing on them. We got so much inventory hitting over this next year. So if anything, there could be deflation in rents. And, you just kind of look at everything across the board. Companies aren't really talking about going up on price because they can't really. So all in all, we're setting up really good for inflation for next year. But I'm going to go to Home Depot Investor Relations here for a moment. Depot IR. Just want to see their overall income statement here. So, Home Depot, net sales down 3%. Cost of sales was down 2.6%. That's not good. If you see a situation where your revenue is down, 3%, but your cost of sales is only down 2.6%, that's not a good scenario, okay? That's not a good scenario. So that's why their gross profit was then down 3.7%. For the company overall. Selling general administrative was up for the company, so this is also not boding well, because if your gross profit's down 3.7%, but then your SG&A is actually up almost 3%, that's not going to be great. Depreciation and amortization was up 12%. Total operating expenses were up 3.6%, so that means their operating income down over 12% for the company, right? It was a pretty negative hit there overall. Net earnings of the company down 12.2%, and if we look at diluted EPS, down a little over 10% for Home Depot here. Not good, but to be expected. The real estate market's trash, right? Just not a lot of people are moving. And if not a lot of people are moving, it's not a good situation for Home Depot, right? People aren't moving, that means they're likely not buying new washers and dryers and, ovens and all these sorts of things that they buy from Home Depot. And, we got to fix that floor over there. And then, the person that's going to sell that house has to fix a bunch of crap because the person that's buying it says they got to fix a bunch of stuff, right? If you ever sold a home or bought a home, you know how that whole process goes. You want this fixed and that fixed. And these are all things that benefit Home Depot in a huge way, and they just don't have that right now. So, I can understand. I think the fact that their EPS is only down 10% or so, or a little over 10%, I think it's actually a win for Home Depot. Believe it or not, like in this environment, this is not a good environment for Home Depot. Their name is Home Depot, and the real estate's dead right now. So it's actually good for them. Customer transactions down 2.4%. Average ticket was only down 0.3%, so inflation's actually helped them, if anything, right? Sales per square foot down about 3.7% for the company there. Cash and cash equivalents over $2 billion in cash and cash equivalents. Total assets $75 billion versus total liabilities of $74 billion. What a crap balance sheet. Only $1.4 billion in stockholder equity. We got a long-term debt number, over $40 billion in long-term debt. Jeez. That's a big number. When you only got $2 billion, basically the company has about 20x the amount of long-term debt versus cash. It's a really bad ratio. Really, really freaking bad ratio for Home Depot there. Checking in here on stocks. Fubo still the biggest gainer, 15, almost 16% gain. JWN, almost 10%. Elf on a Shelf, about 9.6%. Revolve, 8%. Honest, about 8%. Corsair is having a good day. Tesla's still the best of the big dogs out there here today. Palantir's a little weak considering like how strong the market is today. I would have thought Palantir would be up a 4 to 6% type number. So this is the biggest thing no one's talking about right now that I think is a huge deal, guys. And this is something that whenever Wall Street wants to not pump this market higher, this is going to be something that matters significantly. Alphabet pays Apple 36% of Safari search revenues. It's a crazy number, right? 36%. And there's been estimates out there, $10 to $20 billion Apple makes off Google each year. And so the important thing to understand is if the government does something here and tries to not make Google the default and says, Google, you can't pay Apple this money and this is no longer something you can do, it would hurt Google, but it would hurt Apple far more because so much of that money goes straight to the bottom line of Apple. And Apple's the biggest market cap, obviously, in the stock market, and this would be a fundamental change for the negative for Apple, right? And so I just think that's a risk out there for 2024 that I just don't think people are assessing for right now. And if that happens, man, Apple stock will get devastated, and the Qs will obviously get hit in a substantial way. But right now, I don't think that many people want to talk about it on Wall Street because Wall Street needs this market higher over this next few weeks. And so, for right now, I think everybody's just kind of brushing it off over there. But, we'll see. As soon as Wall Street doesn't need this market higher anymore and they've got their Santa Claus rally and they're happy with it and they got their performance, that's when all of a sudden everybody's going to start talking about this. And the risk is going to be assessed. And so, we could have a few more weeks before that ultimately transpires there. But that's a huge deal, man. Huge deal. And I'm just like, I think it should be talked about a whole lot more than it's being talked about right now, right? So anyways, in regards to Home Depot, it's not a stock I want to own. Their balance sheet's so crap. And at the end of the day, when I look at the income statement, I think they're doing okay considering the bad environment. But also, I'd rather just own Amazon. I think Amazon's going to continue to take market share. Yeah, so Home Depot, they're holding together well. It's just not a stock I'm interested in. I think Amazon's going to continue to take market share from them. I just really do. I think, Amazon delivery getting faster and faster and faster, I think ultimately just means that Amazon's going to continue to take market share, right? Because sometimes you're on a job or you're doing something around your house. You're like, I need it. I want this blah, blah, blah within the next hour or two. And so ultimately you drive to Lowe's, you drive to Home Depot or things like that. If Amazon's going to get there, when you were talking about within 2-hour delivery, they're going to get there. And so when you can just be doing a job and you're like, oh crap, I need this thing and just buy it right there now, is actually building out a lot of smaller distribution centers as well. So that way it can help their operations when it comes to delivery be even more efficient. So, yeah, man, there's a lot to be factored in there. But anyways, that's stuff that will play out over years. It's not like that's just something that plays out over a quarter or a month or something like that. That's something that will play out for many years in regards to that.
Market zone. We're in the closing bell market zone. CNBC senior markets correspondent Bob Pisani here to break down these crucial moments of the trading day. Diana Olick with us today on the home builders leading the rally. And Julia Borston on Snap's partnership with Amazon. Bob, I'll turn to you, of course, first. It's only the second 2+% one-day gain in the S&P of the year. We're on track for that. Paul McCulley calling it today, quote, rational exuberance.
That is a great line, and this is about as exciting as it gets as a stocks reporter. 10-to-1 advancing the declining stocks. What do we have here? We have lower inflation, number one. If the Fed's done raising rates and yields are lower, this is going to have a very positive effect on consumers and borrowing. This is why the banks are up. KeyCorp up 10%. You never see these regional banks move 10%.
Well, that's why the Russell is doing what it's doing today. It's
there you go.
Better
Their
than 5%.
financials, yeah, 30% financials in the Russell 2000. So the markets are acting like a soft landing is now attainable. So the pain trade has been short the market. And that's exactly what's happening right now. What about earnings? Well, if really this is happening, that the consumer is going to act better all of a sudden, borrowing costs are going to go down, earnings revisions should happen on the upside. And remember, the fourth quarter earnings numbers have been coming down a little bit recently. That could well turn around. That's another factor in the rally. Finally, as our cash keeps pointing out, a good part of this, we don't know how much, is obviously short covering. Institutional traders have been caught offsides, the pain trade.
The other pain trade is money going into tech, mega cap, and nowhere else.
Yeah.
Now, one day doesn't a new trend make, but let's see what happens if you're right.
It is a very positive thing that the Russell's the outperformer
because
today.
Then you'll have money going into these other cyclical areas.
Well, that's what's happening.
It's extremely, I would guess you can say bullish, that the Russell's a big outperformer today because no one's really trusted the rally until the Russell starts outperforming these other indexes. And when that Russell starts finally outperforming these other indexes, then you get more into a more comfortable bull market cycle. If it's just, some of the biggest stocks, a lot of people look at that as it's not healthy. You got to have the Russell start rolling if you're going to talk about a healthy, true, real bull market. Wow. Okay, so before we play our game here, Paysafe reported earnings this morning. $365 million they did in the same quarter last year. They just did $396. Gross profit up to $232. They did have a net loss for the company. Interesting. Adjusted EBITDA $116 million versus $95 million for the company there. So, Merchant Solutions, slight rise. Digital Wallets was a really nice number for them there. Total revenues $396. Merchant Solutions, adjusted EBITDA, blah, blah, blah. Corporate, negative 21. They run their numbers weird. I just want to see an overall income statement for these guys. $226 in cash. Total assets $5.2 billion. Total current liabilities $1.7 billion. Okay. Total assets $4.3. Shareholder equity of a little under $900 million. So SG&A actually dropped for the company year over year. Depreciation and amortization roughly in line. Operating income $43 million versus only $4 million same quarter last year. Wow, it's like a 10x. That's impressive. Income before taxes $14 million versus $8 million. That's a little weird. Interest expenses. Hey, killing them though. $38 million interest expense. Yeah, that's what I say about that. Somebody says, real question, are we going to be down tomorrow? You never know. Never know. You never know. Somebody said, any thought on tax loss harvesting toward the end of the year, first week of December? I mean, there's still going to probably be tax loss harvesting in this market in December, likely. I'm guessing a lot of the Wall Streeters are still going to probably tax loss harvest on a lot of those dividend stocks. They're likely tax loss harvest on, I don't really know about some small caps, to be honest. But I think some of those safety stocks, some of those dividend stocks are still going to get tax loss harvest. By the way, what the hell happened to, I want to look into Celsius here for a moment.
With the moves in the stock. Exactly, and I'm going to get to that. But to your point, 10 straight days, Nvidia has added over $200 billion in market cap. That's like adding an entire Salesforce or Netflix. And it came close to its all-time intraday high, which was $502.66. You can see it's at $496, so not too far away. But to your point, what's driving this winning streak when you maybe think, the AI is already priced in? Firstly, yesterday the company announced an updated GPU, the H200, with even more memory than the previous version, the H100, the one that's been on back order with a 30-week lead time, and the same one Elon Musk once said was harder to get than drugs. The only pitfall is this new chip still has less memory than AMD's new AI chip, which ships out in Q2 of next year. But overall, there has been a return to the AI trade, given depressed valuations, and we're seeing improved demand from hyperscalers like Meta, for example. For 2024, consensus estimates show $60 to $80 billion in Nvidia data center revenue. That's a huge...
Shaheen said, if Fubo went to $10, would it be the largest position in the public count? No, it wouldn't even be close. It still wouldn't even be close. Fubo would have to go to stocks like Tesla and Meta wouldn't be able to go up anymore. Those ones would have to just stop going up. And then on top of that, Fubo would have to go to $30 a share, something crazy, to become the actual biggest position in the public count. It would have to go up so freaking much. It would have to at least likely 10x. That's what I would put it, I think. Probably like a 10x or close to a 10x maybe a 7x, something like that. And once again, those other stocks would have to not go up in order to become the biggest.
Which is kicking off Ignite as well, where there's a lot of reporting ahead of it in anticipation that we're going to see an AI chip unveiled by that tech giant too. I mean, Christine.
By the way, Nvidia earnings are going to be crazy. Can you guys imagine when we do the Nvidia earnings live stream? That's going to be nuts, man. That's going to be a packed live stream. We're going to easily have 1,000+ people on here for that live stream. That's going to be crazy. That should be coming. Let's see. Nvidia should be reporting either the very end of this month or the beginning of December, and that's going to be wild, wild earnings. That's going to be wild live stream. So Celsius is weird. This is very weird with Celsius. This stock is struggling right now. I mean, it's down 12% in the past 5 days. And, this is in a time period when obviously a lot of stocks are doing tremendous right now, right? Jefferies initiated, this was yesterday, Jefferies initiated Celsius to a buy, given its potential for significant growth in its distribution arrangement with PepsiCo. The firm has a $217 price target on it, 26% upside based on Friday's close. So, I say a bunch of positive stuff, blah, blah, blah. Jefferies is projecting a 26% compounded annual growth rate, CAGR, compounded annual growth rate from 2023 to 2027, which is a very impressive number, by the way. Basically saying Celsius only has 4% type market share of energy plus category in $83 billion market. Also, while it's still playing out, the company's distribution agreement with PepsiCo should allow it to expand distribution and shelf space. Yeah. Finally, Celsius is expanding into Canada and Europe. Analyst notes that he expects international sales to account for $185 million in sales in 2027, 6% of overall sales. So that's a very bullish note, but yet so maybe a big shareholder selling out for whatever reason. But yeah, for that stock to be down today, it's down 12% plus in the past 5 days. Something is up there, but maybe it's just a big shareholder selling in regards to Celsius, but it is pretty freaking strange. I will say that. 21st, only a week for Nvidia. Wow. This seems a little early. I figured Nvidia would wait till after Thanksgiving or the first week of December to be reporting. So if they're reporting on the 21st, let's freaking go. That's exciting. There's no way Nvidia doesn't go to $500 in the next earnings call. Well, there is if they reported guidance that was seen as weaker, right? And by weaker, it doesn't mean it's down or anything like that. It just means it's like not very exciting. And people look at that and say, oh, maybe Nvidia's best growth is behind it or something like that, right? If that were to play out, then Nvidia actually wouldn't go up, and it would potentially go down because people would say, oh, okay, 2023 is as good as it gets, and 2024 could be looking weaker or whatever. People run to a lot of conclusions. As I told you guys many times, like if you're going to play catch up to the market and you're underperforming the S&P 500 significantly, what are you going to play catch up with? You're going to play catch up with big tech. You're going to buy stocks like Tesla. You're going to buy stocks like Nvidia, Shopify, those sorts of stocks, because those are the ones that usually are going to give you, some sort of big alpha over the S&P 500. And so that's what we see playing out right now. So, I think sometimes stock prices make people too unconfident in stocks or overconfident in stocks, right? Meta's move, for instance, last year made a lot of people too overly bearish on the stock, like seeing it go under $100 and thinking it's donezo for the company. And I think, some of these price movements we've seen in some of these big techs this year are probably making people a little too confident in regards to what's going on with their stock prices and where they're headed and things like that. So, as a Tesla shareholder, is my second biggest stock in the public account, right? I was up $22,000+ on that stock here today, but could Tesla still go down, to 180, 150 over the next 6 months? It's a potential. It's all what Wall Street wants to do with this market here in the short term. It's all what they want to do. We don't control it. Just understand that. That's why I stay invested over the long term, because, you try to play this market in and out, it's just a losing game. I mean, look at a day like today, for instance. You miss the biggest rallies by trying to play that game. I mean, imagine missing today's rally. Like your best gains over time, if you just took out a few of the best days, it completely changes how you compound money over a year span, over a 5-year span, 10-year span, 20-year span. They've done studies before that if you just missed a few of the best days, like literally just 2 or 3 of the best days in the market in a particular year, it fundamentally changes your return profile in such a negative way. It's crazy. And you look at a day like today, like imagine, I was trying to play this market. I'm like, I'm going to get out because CPI is coming out tomorrow. And I just missed out on a $61,000 gain here today. I mean, it's just crazy, But anyways, it's a whole other story. I think the next couple days are going to be pretty interesting here. So we have a lot of retail earnings. So tomorrow before the bell, Target reports, TJX reports as well. So those should be really interesting. We'll look at all those numbers on the live stream tomorrow. And then after the bell, we actually get 2 interesting companies reporting. Palo Alto Networks, which is actually a pretty dang big market cap. Palo Alto might be 100 billion plus. I'm trying to think. See Palo Alto. It's become a very big company nowadays. Very big company. Yeah, getting close to $100 billion market cap. $81 billion market cap. Palo Alto Networks is up to now. So they're reporting after the bell tomorrow. And then Cisco Systems are reporting. So that should be interesting to hear what they have to say. And there's other stocks that are reporting outside of those as well. And then Thursday should be really interesting as well because we'll have to look at Walmart's numbers in depth as well as Williams-Sonoma. I think that one should be interesting. And then Bath & Body Works is also reporting before the bell on Thursday. So we're going to get a good idea of the consumer over this next 2 days and what's actually going on there. And then Ross and Gap are reporting. But, in regards to a move like we had today, I mean, tremendous day. Obviously, we made a lot of money. I think everybody made a lot of money here today unless you're a bear. And you're all short the market, right? Which, if you're all short the market, you probably already went bankrupt this year. I never get too excited about these sorts of days. No different than I don't get too down about the down days. It's just another day in the market, and there's still a lot of scenarios to play out next year. There's a scenario that can play out next year around inflation remaining higher, the Fed having to raise rates more in 2024. There's a scenario that could play out in which inflation is not coming in too high, but the Fed doesn't lower rates because the economy is in a pretty good place. There's a situation that could play out next year where the economy could actually deteriorate substantially and the Fed has to start cutting rates, but at least, that's because you're going into a major recession. That's a scenario. There's another scenario where, inflation continues to, let's just call it, the inflation's in the 2s pretty much all year next year. And then we have a situation where the consumer's in a much better spot and the economy chugs along pretty good. And the Fed either keeps rates the same or maybe they lower rates slightly during the year. So there's several different scenarios that can play out. No one really knows what's actually going to play out here. But those are just kind of the scenarios I walk myself through. And those are all the scenarios I'm preparing for personally in the market. So regardless of what happens in the market next year in 2024, I'm set up for it. If the market goes down substantially for any reason, great. My hedge is going to print money. If the market goes up substantially, my longs are going to print money. If the market kind of stays the same roughly, great. I think there's a ton of opportunities in this market. I would love to have a nice opportunity to buy stocks for a good amount of time here. So, but yeah, that's kind of the way I think about this market overall, folks. So, alrighty, folks, I appreciate you joining me. Thanks for being here on the live stream here today. Much love as always. I'll see you tomorrow for tomorrow's live stream. That should be an interesting one. Got some earnings to react to. And then, alrighty, guys, much love as always, and peace. Have a great day.